Wanted to go through my top 5 trading and investor mistakes not to make when you're first getting into cryptocurrency. Subscribe to the channel down below if you want to see more of this content. Like the video, it really helps me out, and hopefully you find this content interesting. So let's get straight into it. My number 1 tip is going to be holding coins just because you think they have to do a 10, 50 or 100x in the future. What might be today's hottest coin, okay, in 6 months, a year, or 2 or 3 years, that narrative might change and that coin might be completely shit. Substratum, Icon, Ontology, I'm looking at you from 2017. I did this when I first got into the space and I was following people online, trying to get as much information and absorb as much as I could. And I was just going, do you know what? I don't care. Whatever money I put in now, if it seems to me like it's going to be some sort of automatic and guaranteed return in about 2-3 years, even if I have to wait that long to make $1 million, to make my first 100x, I don't care. The reality of the situation is that a lot of these coins, and most of these coins, will just fade into nothingness. So you need to be flexible with your approach. Don't just assume that just because you hold a coin and everyone else thinks it is great at the minute, that it's going to be, doing really well in the future. Most of the time when people are telling you to do that, they're shilling you these shit coins, and then in the end, you end up holding their shitty bags for a year or 2 or 3 until you get totally frustrated, and then you just sell it at just a stupid loss, and then you're out of the game. That leads me on to my second tip, which is to not copy other traders and other YouTubers just because they give you the promise of a better life. You should never copy me or other people just because they told you that some stock or some coin is going to go to a certain place, okay? You should always build up your own trading strategy and use mine and other YouTubers or other people that you follow to create your own system and trading plan for your own personal investing strategy. I guarantee that if you back test this and you go through people's old videos, okay, and you have a look at people's past predictions, most people are wrong 70, 80, 90% of the time, right? I can point you to so many people who basically were, shilling out a load of hopium and whatnot towards the top of the bull market, and they give you a very irrational response, okay? So, you've got to be wary of that. Be very careful when people are promising you and they are talking in absolutes and they don't give you, different possible scenarios when it comes to where the price can go up and down. Because remember, a lot of people are holding these shit coins, especially the big YouTubers in the space, and what they're trying to do is basically just sell you views, make you click on stuff, and just buy a load of shit, okay, to keep you engaged. Which leads me on to my third point, which is making sure that you have a proper, structured, formulated trading and investing plan. It's hard enough to manage your emotions when shit is absolutely tanking down to the floor and when things are going sky high and rocketing up to new highs, okay? So what you need is a way of systemizing, the way that you invest and trade so that takes the emotion out of the equation. So for example, what that might be, it might be taking profits up along the way, and that's your strategy, that every time it reaches a certain price, you're going to take maybe like 10, 5, 20% off the table, and you do that. And then likewise, if you have a certain strategy or trading plan, and if that doesn't work out, you need to know where you're wrong and where you are invalidated in your setup so that you know how to take a loss, okay? Taking a loss is as important, if not more important, than knowing when to take profits, okay? Because if you don't have any capital left to play with, you're out the game. You don't want that. I can tell you that from experience, what I didn't expect was actually managing emotions in a bull market is actually harder for me personally than managing emotions in a bear market, because for me during a bear market, I'm happy to just accumulate coins and buy a little bit more if they go lower, and then just waiting for that next big move to the upside. But I can tell you that when you do get to those mania phases, they are really, really, typical of the crypto market. Is you do tend to find that you almost don't want to sell your coin because you get married to them, and you really want to avoid this because, let's say you've made 40, 50x, okay, that is totally okay to, take big profits off the table, especially if it's a lot of life-changing money, okay? Don't just hold coins in the hopium that just because someone else on the internet has told you that, for example, Cardano is going, to $5 to $10 this year, and you see that branded around on the internet, take profits where you feel comfortable. Don't just copy what other people are doing. Really, I can't stress how much having a proper structured plan is going to be, super important for the long term in terms of keeping you in the game and making consistent profits over each month and over each year. Because as long as you're making profits over the long term and you're sticking to that plan and that plan is profitable, you're going to be good. Fourth tip is going to be not overexposing yourself financially in the market. I can tell you that the best trades and the best investing strategy is the one that helps you sleep at night. If you have too much invested and you are not able to control your emotions rationally and come up with a rational plan, okay, it is going to lead to poor decision making and ultimately is going to cause you to basically lose money. If you find yourself checking your phone every 3 or 4 times an hour, okay, and you're waking up in the middle of the night because you can't sleep without actually checking the price of a trade that you are in, or checking the price of Bitcoin, you've probably got too much invested. You'd be really surprised if you actually just reduce your position size and you actually reduce allocation to the point where you almost don't really care about it so much. Watch how your decision making becomes so much better. You need to ask yourself the question, for the money that you have invested in the market, would you be able to live with yourself if you lost it all? If the answer is no, you've got too much exposed. Reduce your position size. Sounds great if you're going to make £1 million and that's your upside, okay? But if your downside is losing your house, you lose your wife and kids, you got your mortgage has gone to kaput, okay? Then that is not a good way to trade and invest, okay? So like I said, linking that back to kind of the stuff that I said before, just because people are promising you that, for example, Bitcoin has to go to 100,000, $1 million, whatever it is, and you're just saying, do you know what, I'm gonna put in all this money and I'm just gonna hold until it does happen, okay? Don't do that. That is not a good trading and investing strategy. Especially in crypto, you need to accept that it's a very volatile market and you need to accept those sort of swings before you get in. So when you get in, you need to accept that, hey, look, am I prepared to take, for a long-term investment, a 50, 40, 30, 70% drawdown? If you are, and you're okay with the money you've got in, great. But if you can't, got too much. And tip number 5, which is my last one, is looking for the next best trading strategy. There is no magical formula. There is no magical trading strategy which will make you money, okay, whatever people show you online. It all comes down to putting in the hard work, experience in the markets, okay? That is what is going to keep you in the game and keep you consistent. When I first got started, I remember going through absolutely every indicator, and some worked, some didn't, but ultimately what it came down to was basically, for me personally, finding confluence and sticking to maybe 2 to 4, key indicators and key ways of trading to basically dilute the noise and essentially, come up with a strategy for me that works. And obviously what you can do as well is go and back test your strategy, okay, and see if it works. And so long as you have a good risk management in place where you are essentially risking less than you're willing to make, or you're correct more often than you're wrong, over the long term, you're going to be profitable. You can use so many different indicators, and really it's your application of those indicators and your interpretation for yourself and how you implement them into your own trading strategy, which is going to work. You can use RSI, you can use MACD, you can use moving averages, you can use trend lines, you can use order blocks. All of those stuff are valid, okay? But I would recommend probably taking about 2 to 4 different trading strategies and trying to become a master of those instead of just like a jack of all trades where you see people that have got 50 lines on a chart, 50 different indicators and fib lines for every single extension and whatever. So like I said, keep it simple, come up with a trading strategy, go back and back test that strategy over a number of coins and a number of different time periods so that you can find something that works for you. I hope you found that useful, and those 5 quick tips help you stay on track and at least remind you to basically, you're making sure that you're taking the right actions and you're taking some of these steps to becoming a better investor and trader. If you liked the video, like I said, and you made it to the end, please go ahead and drop me a like down below, subscribe to the channel for more updates and constant videos, and I'll see you in the next one.